Crude oil chart, we put this in there, what, 2 weeks ago, 3 weeks ago, we recommended hedging or getting some fuel bought. And turns out it sounds like it's been a good idea for most people. We've rallied on the crude oil market, and diesel fuel prices have gone higher as well over the last couple of weeks. But this market looks to remain somewhere between $58 and $55 a barrel crude oil for now. And then Bill, you want to talk about maybe the dollar versus the real here?
Well, the dollar trade in general has been my focal point for an extended period of time. And the bottom line here is we had a rally up to new highs. They were multi-year highs, hadn't been there for several years. And the bottom line right here, when you think about the background and step back a couple of steps, in order to get the dollar to either rally extensively or to break significantly, you have to have a structural shift in monetary policy. With the change in administration, that's a possibility, but I think that's more Fed-driven than it is politically driven. And so watching for indications. Right this minute, we've seen a surge in domestic value. We've seen an increase in interest rates, which typically means higher currency value. That gave us our new high for an extended period of time, but that probably has run its course for the time being. What I think realistically, we now have what I would consider a high of consequence on the charts, and we've pulled back. Now we've got longer term moving averages right now. Is the dollar going to break significantly? Probably not. But what we have done is taken away some of the headwinds for commodity prices because the dollar has established a high of consequence. Once that's done, it makes commodity values a little bit easier to advance, and it gives the trade a little bit easier pathway to execute. So that is, at this particular point in time, watching the crude market because it's probably the granddaddy of commodities, and then watching the currency values right here, right now. If the dollar stays in this range or could back off just a little bit more, maybe pull back into that 98 territory, commodity values in general would be a little bit more enticing and probably facilitate more fund activity migrating into the commodity sector. Then we'll watch and see what our index markets do, or our stock markets. And if they start to lose favor, we could see some money flows come back into our environment, which would be conducive to positive price action.
The other good thing that's related to, we'll show you the real here. The dollar's been coming down, and actually the real's been going up. So that really kind of helps our position in selling these soybeans. There's been a lot of discussion that the Chinese had bought a lot of our beans because of the shortfall in the South American crop last year, and those exports would kind of fall off the face of a cliff here once we got into the new year. But a couple things have happened. Again, when you look at that relationship, it's kind of twofold there, Bill. When the dollar comes down, the real goes back, you really get more of an impact than you might expect. And going forward with the South American weather again, we started to see some more Chinese interest that we might not have expected before. So a couple other little positive side notes there when you look at those two currency relationships.